Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, thank you for coming on today.
Good afternoon, Devin.
So we see now that the Korean economy shrank in the second quarter by more than 3% compared to the first quarter. Tell us about that, Professor.
Yes, a negative 3.3% economic growth is something very disappointing result because earlier, Bank of Korea anticipated Korean economy to shrink only less than 2% in second quarter. As we have seen in previous report, this is the worst performance in over two decades. The shrink of Korean economy was largely caused by export drop, and we saw like a two-digit percentage export drop over 4 straight months from April. And at the same time, domestic consumption remained weak in second quarter too. Domestic consumption decreased by 4.1% on annual basis. So this year's economic growth, therefore, will largely depend on the course of COVID-19 and the degree of major exporting partners lockdown.
It's disappointing to be sure. It seems Korea is also losing jobs in the manufacturing sector. That continued to be the case from March into April, but there are concerns it could get worse before it gets better. What do you say, Professor Kim?
This employment decrease is very much expected from the beginning of coronavirus outbreak in March. Korean economy is relatively more reliant on manufacturing industries in its income generation and employment. Particularly, manufacturing industry hire relatively also more temporary workers. So according to government's statistics office, out of all workers who lost jobs over coronavirus crisis, 94%, this is almost 100%, is temporary workers as of now.
In other news, we see the Trump administration has told China to vacate its consulate in Houston, Texas. China is saying it's going to retaliate. What kind of impact do you see these tensions having on the financial markets?
As we have seen from previous report, U.S.-China are in de-escalation in a rapidly worsening diplomatic relationship over shutting down Houston consulate. Because of this burden, all European markets had negative returns yesterday, and Asian markets also all decreased between 0.3% to 0.6% today. But the U.S. market in yesterday gained by 0.6% in S&P 500. This is due to kneeling coronavirus vaccine development news by U.S. pharmaceutical company Pfizer.
Now, in the markets overnight in New York, stocks were higher. Korean stocks today were mixed. The Kospi lower, the Kosdaq higher by about the same amount. What's the story in the stock markets?
That's right. There were mixed market situations between Kosdaq and Kospi in today's domestic market. Kospi lost by 0.6% today due to domestic institutional investors like banks and insurance companies, big sales of Korean stocks. But Kosdaq gained by 0.8%, even with the serious conflicts between U.S. and China. Foreign investors bought Kosdaq bio-stocks in large scale today.
Now, Professor, Korea has declared a one-off national holiday for Monday, August 17th, which will make that a 3-day weekend. The hope is that it'll boost consumption in Korea. What do you think about that idea?
I think there will be great positive impact from 3 straight national holidays in the middle of August. It will support, therefore, domestic expenditure, particularly by increasing sales in travel, restaurant, retails and so on. Actually, Korean government previous emergency cash-out program was successful in preventing massive fall in domestic consumption, but the effect of cashing out program phase out these days. So designating another holiday will be an effective stimulus for increasing domestic consumption.
And welcome news for a lot of people weary of the pandemic, for sure. Professor, thank you for sharing your insights today. We appreciate it.
Thank you very much.